So after closing in the red yesterday, local stocks will be hoping to win back lost gains. The JSE All Share index paired early losses to close about down on Tuesday after subdued economic data from China and Europe rekindled worries about the global economic outlook. Benguela Global Fund Manager, Senior Portfolio Manager Grant Nader joins us now to dissect these and other leading business stories. A very good morning to you. Thank you so much for your time. Let's perhaps start off with an overview of how the markets are faring so far in early trade. Did yesterday's GDP data move the needle at all?
It didn't, unfortunately. Yesterday the GDP data came in better than most expectations, 0.6 versus 0.4 expected by most and even above the Reserve Bank. But we saw the market sort of pick up off the lows. It was a down day yesterday. Some buying came in toward the close, but not really enough to change the dynamic. The rand weakened again on the day, and it's weakened again this morning. So the top 40 this morning is down about 0.7%. And what stands out is that all the sectors are in the red to start the day. And most notably the retailers. They've come out with some results recently, and they are starting to show signs of some of the strain in the consumer and in the economy. And so that as a sector is leading on the downside, followed by resources, which are also coming under some pressure. And just generally, I think the news around oil, where we're seeing oil prices moving higher overnight, is also putting a dampener on the market's outlook at the moment.
Grindrod Shipping Holdings Limited unaudited financial results for the 3 months and 6 months ended June 30 of this year. How have they fared?
So the 6 months to June was actually a good number. Earnings were up around 26%. But for the last quarter, the results they fell away significantly. I think Grindrod has had to incur quite a lot of costs around building out infrastructure in Mozambique and the like to offset some of the Transnet challenges they've had. I think they've done a very good job of it, but shipping rates have come under pressure over the last several months as supply chain disruption has eased. And so it's a cash generative business, but earnings unfortunately down in the last update around 98%. But collectively over a longer period of time, they were up 26%. So a very sharp drop in the most recent period. I think overall the business is still doing well. Yeah. They are subject to some of the other constraints that we're all seeing as operating in South Africa under the Transnet constraints, if you want to call it that.
Yeah, absolutely. What about the Foschini Group? It published a trading updates. How have they performed in the periods under review?
It was a reasonably decent set of numbers, I think. So South Africa seems to be doing well. The last August, post their June update, so July and August has actually seen some reasonably good growth, and that they did include the acquisition of Tapestry in that. So not a bad set of numbers there, up about 11% overall so far. But what stood out was the UK and Australian businesses performing worse, a bit slower than expected. And if we look at Truworths, which recently updated their numbers, they did really well in the UK. So to me, Foschini stood out as underperforming its peer in that space. So that's a bit of a disappointment. I don't think it'll be that well received by the market, but it is a tough environment, and they are doing what they can. Margins have continued to come under pressure. Costs are high. They are losing a little bit of volume, and in the face of a slowing consumer, as are all the retailers. So I would say it's an average set of numbers at best.
Yeah. Marianne Roberts says that despite its catastrophe in Australia, it's still seeking to regain control of its Australian mining business. Is this a worthwhile exercise, or do you think that they should perhaps cut their losses?
Look, that's a very good question. I think so many companies have been burnt chasing diversification of income overseas. The real question is it a good business underlying that? They do say it is their primary competency now in the mining services space. And it depends on the cost attached to securing that business. I kind of think these companies should be focusing on where they are doing well and ignoring where they are not, sort of stepping away from all these distractions. We've seen it time and again with many South African businesses. So unless there's an easy path to operating and securing that mining operation, reclaiming it, I should say, I think they should walk away and focus on what they can control.
Very well. Thank you so much. Let's perhaps leave it there for now.